Well, we're back, everybody. Mark Mousseau speaking. And in this section, what I want to talk about is the financial projection of this project. Anybody that wants to buy a real estate investment property, that wants to rent it, has to look at what their income will be, what their expenses will be, what their returns will be. So what I've done is what we have done, Bridgeport Development, is we prepared some financial projections that we will share with you, and we will actually at first give you our assumptions, and then we'll move towards the projections themselves. So this will be a mix of a Word document that you'll see, which is the document that starts up the financial projections, and then we'll go to an Excel spreadsheet, and you'll have three different documents. One of them is for the one-bedroom model A, two-bedroom model B, and three-bedroom model C, and you'll see how we came to calculate your income and expenses, and we'll give you some information on this. So without further delay, let's move to our financial projections. Okay, so here's the agreement per se, or at least the assumptions that we're using to get you to financial statement. So we'll review this first, as mentioned, financial projections, and based on this afterwards, we'll talk about the contract per se, the presentation by itself. So basically, what you have to know is that this is from the effective date for a period of 5 years. So regardless if we close in May, June, or July 2016, basically these projections are made for a period of 5 years from the effective date. What's naturally important to understand is the following. These projections are prepared by management. So they're prepared by us based on what we believe to be the most probable set of economic conditions. So we use hypotheses, des hypothèses, that are, in our judgment, pretty strong. We know what the rental market will be there. We have 20, 30 years, 30 and a few years of management experience and project experience. So we sort of had a very good idea, and you'll see in our projections that we've been we've been making sure that you're not going to be stuck with a bad investment, if I could say so, or a bad purchase. So we know what our numbers are all about. Naturally, there's some sort of disclaimer here. We're saying that, their objectives information, their hypotheses, they're designed to provide you with information, but it's a projection. That's what I could say. The assumption and hypothesis disclosed here are those that management believes are significant to the projection. Some assumption inevitably will not materialize themselves due to unanticipated circumstance. So we just know about it, and these are prepared as of September 15, 2015. Okay, hypothesis. Okay, we're basically bringing forward the fact that this is for a period of 5 years. And what we want to do is to give you a worry-free real estate acquisition opportunity for a period of 5 years. Okay, so first of all, regardless of the rental income that is generated by the property, Bridgeport will sign a lease with the purchaser for a period of time, and this lease will also have increases in it. So it's not only a matter we'll give you 19,800, we'll give you 19,008 for year one, and so on and so on, and you have that in detail in the financial projection and in your contracts. Okay, so this lease will actually be part of your closing documents once we move forward in transaction. We've also calculated the operating expense to go up by 3% per year. So we know that they will range between 2 to 4%. We've calculated them at 3% increases per year. Bridgeport will actually be making the mortgage payment. So you don't have to worry about, oh, I got to make my mortgage payment this month. We're collecting the rent, we're paying the bank directly, and it's actually one of their requirements in order to lend to an investor out of Canada or anywhere actually. We'll also be doing the same thing for property taxes. So we're paying your taxes for you. So there's no need to be worried about this. And let's talk about income tax here. Okay, so first of all, personal and corporate taxes. Bridgeport does not make any assumption, projection, or recommendation in regards to tax implication of buying real estate in the United States of America. So we're not giving you any advice here. And the reason I'm saying this is that we're basically saying, here's your property, you own the property, here's your income, and it's going to be backed by a lease. Here's what we project to be the expenses, and this will be your net cash flow. Each investor should consult their accountant for the deductibility of certain expense from your personal income or your corporate income. Now, some of these expenses would be interest borrowed to legally generate an income, and I say legally, it's a term used. In our case, Revenue Canada says that any money borrowed for the purpose of generating an income in real estate, the interest is tax deductible. You should talk to your accountant about depreciation of building, depreciation of appliances. We've included that in our packages. Okay. I'll just go back. The first mortgage loan, well, effectively 6.5% is what we calculated. 25-year term, 25-year amortization over a 5-year term. Same thing for secondary financing, which is the mortgage that Bridgeport Holding will hold on the property. This one is at 7.5%. And I've already mentioned a few times that management will be provided at a cost of 6% of the gross period for a period of 5 years. Now this is fixed. You are basically, this is a fixed expense. We will not increase our management fee more than that amount per year. So these are the assumptions. Now let's go towards the financial projection themselves. So for those of you that have already listened to the description of the 1-bedroom, this is basically the same information as you got the first, but some of you jump directly to the 3-bedroom Model C unit. So I'll do it quickly. Most of you will understand what it is. Basically, it's an income and expense statement, taking into consideration, naturally, your mortgage payment and so on. So a quick recap on this 3-bedroom property. You will have a lease and these amounts. So the first year lease on a 3-bedroom will be for $30,600, $31,000, and so on, which gives you $2,550 a month. Taxes, insurance, repairs and maintenance, management fee, vacancy again, vacancy is 0. Management fee is 6% of what number? 6% of this number right here. So 6% of 30,006 is 1836. Which again gives you an expense, and you notice that the expenses are a bit higher on this 3-bedroom. Quite simple, is because per square foot, your expense goes up per square foot because there's more to repaint and so on and so on. So that's basically a 44 to 46%, and don't forget there is no vacancy on this property. So this is very respectable, if I could say so. So 30,000 minus all of the expenses, so 30,006 minus 13,486 gives you an NOI, a net operating income to the purchaser, of 17,114. Now we pay the mortgage payment. That's a principal. This is principal and interest. There is basically $4,019 left of positive cash flow. And again, if you look at it, it's $335 per month on a 1-unit acquisition. So you're owning one door, and it cash flows $335 a month. Goes all the way to $364 on year 5, basically because of the increase in income, good management, and don't forget that you're still paying some principal down. So in resume to this, you get basically $74,000 over a 5-year period by putting a $70,000 down payment, $21,000 in cash, which is this here. So this is your projected cash flow. Then you get $15,500 in principal repayment, this right here, and you take the property value, increase it 3%, and you'll make about $37,500 in appreciation. So again, this 3-bedroom unit is an amazing unit. We believe that they will rent very easily. Our biggest concentration of units are 2 bedrooms. Corner units are 3-bedroom, and central units are 1-bedroom. So guys, reserve your spot. Reserve one of these. This is very, very simple math. You've got a signed lease. You got a cap on your condo fees. You're paying your principal and your interest. We're doing this. We're doing all the management, whatever there is. and net, you should have $335 per month in your account, in your US LLC account for you to transfer. Don't forget this is in US dollars, so people that come and say, well, don't forget, Mark, the down payment on it is in US dollars. Yes, but the income's on US dollars. The return on investment is also on US dollars. So just look at it as this is the investment for a 3-bedroom Model C unit. So basically, this sort of caps off or resumes the financial projections. I hope you understand everything. And if you do have some questions, please feel free to give us a call, send us an email. You could reach us at info@bridgeportdevelopments.com. Talk to you soon, everybody. Have a good one. Bye-bye.